Should you invest in the Calgary real estate market? I think the answer is yes. One of the things I do want to mention is investments, especially in real estate, does carry risk. So do your own due diligence and try and give yourself the best possible chance to be successful. Everything I talk about today will be with respect to the Calgary market. The first thing I want to talk about is Calgary has a pretty consistent real estate market when compared to the rest of the country. Since 2000, there has been an average of 5.2% year over year price increase. And if you look at any point on the graph on screen, there are no 10-year spans where prices were lower 10 years prior to whichever date you select. So it's a very consistent market. So when you purchase an investment, the cash flow really starts in the future as values consistently increase, and you can start bumping up the rent and start getting more cash flow that you can then translate into new properties and grow your business that way. In Calgary, generally you make the most amount of money through your value appreciation and covering your costs. So as I mentioned, not every property is going to be right for the same investor. And so in Calgary, there's typically 4 different property types that we see a lot of investors purchase. To start with the most attainable and cheapest, we have single unit condominiums, which would be like your apartment or a townhouse or sometimes a villa, although villas can get expensive. They're a good rental opportunity. Single dwelling homes. So we're looking at non-condominiums like semi-detached or half duplexes and single family detached homes. For suited homes, you're looking again primarily at the half duplex and detached homes, but there'll be a secondary suite or a secondary dwelling over a garage called a carriage suite or a basement suite. So those will generally be a little more expensive depending on the area that you want to invest in. And then for the most expensive properties, we get into full duplexes and multifamily. The pros of condominiums are you have a low entry price, the lowest entry price. You can get you can get apartments for less than $200,000, and you can get 2-bedroom apartments that can net almost $2,000 a month in rent for $300,000. So it is a good option. There are also many options on the market. So you can get into many different areas, and you can even be in close proximity to where you live, so you don't have to go too far to manage the property if you choose to do that yourself. There's a larger renter market. Most young individuals start off by renting an apartment. It's nice because they get their own private residence, they likely get good parking, and they can kind of determine where they want to live around the city. So it's a good option that comes with stable pricing, and I really enjoy investing in condominiums myself. The cons with them are you're less likely to cash flow right away. You have maintenance fees, condo fees, that are going to eat away at your profit, which might be a little more than your typical maintenance on a home. So keep that in mind. Condo fees may go up at any time, and you won't have any control about how the property is maintained or managed. So you could lose cash flow or end up going into a negative cash flow situation. So there is a little risk to that. And then of course, because the value is lower, your total appreciation will be a little bit lower just naturally through percentages. 10% of 300 grand is 30,000, whereas 10% of 500 grand is 50,000. But you have lower cash injection, so it's not a bad option. Now I want to talk about single dwelling homes. So the major pros to that is they're great for resale. Generally speaking, single dwelling homes have better resale than apartments and condos historically. You often get long-term renters, families that want to live there for a number of years. I just saw one that was there for 13 years, which was incredible. There's also many more options on the market, and you have great cash flow in some really good areas in Calgary. So there's some great pros to single dwelling homes. For cons, you get a higher price per single dwelling. Your cash injection will be a little bit higher, and then major maintenance could also leave your house vacant for a number of months, and you'd have to take over that entire carrying cost while you do the maintenance. Suited homes are one of the best options when owning an investment property in Calgary. So you get 2+ dwellings per property, and you also get more security for vacancy. So even though you might have one of the dwellings vacant, you still get rent from the other. So your carrying costs might be a little bit low throughout vacancy. This is also important if you plan on doing upgrades and renovations to the property. You can still accumulate some rent while you're doing those upgrades, and you can do each suite separately. It's a really good option. The best market to get into is suited homes, in my opinion, and that's just because the price range for what you can do to the property, and if you buy something that you can renovate or do the work on yourself, you can really save some costs and develop a really high level of rent, creating great cash flow. The cons, entrance price will be a bit higher, and it is a very competitive market to buy fully finished suited properties. Cash flow will be a little bit lower if you're buying a fully functioning property, and that's why the biggest pro to a suited property, or one that's zoned for it, is if you do a suite yourself, you can increase your cash flow and increase the value of your property without having to go in at top dollar. I'm going to talk briefly about full duplex and multifamily. I don't personally deal with it that much, so I just want to go through some quick pros and cons that I've learned over working with investors over the years. So pros, you get multiple dwellings in one location. Often that means you get a bit of a discounted price per dwelling, but you still get the rent. So your cash flow will be a little bit higher. There's also a lower risk of carrying costs when you have vacancy, because some of these units or buildings might have 4 to 10 plus dwellings. So having one vacant, you won't have that much carrying costs, especially with a little bit higher cash flow. And so that'll help you be able to do renovations and updates to any property. Now the cons, very high entry price. You know, fourplex in Calgary can easily be over $1 million, and then it can just balloon into millions and millions of dollars. So something to consider is a lot of highly funded investors will purchase these properties. It's a very competitive market, and sometimes they're not very saleable. So it depends on where you are as an investor, but I'd say if you're a higher worth investor, these are great options. However, if you're looking to just get into investing, I would stay away from full duplex and multifamily and stick with suited homes or apartments and condos. To conclude the video, I just want to discuss that investing always inherits a bit of risk. So make sure you understand the risk and you do your own due diligence to minimize that risk.